Thank you, Sandra. So after lunch, we will start and we will finish with the most digestible items that we have on the menu. So the method of calculation and reporting of indirect costs. There are two basic methods of doing that, either by full cost accounting. I will put a small bracket in there for the simplified method. And the second one, the flat rates. Flat rates are split into 20% for everybody and 60% available to the institutes that are defined in the grant agreement and the SMEs. So the beneficiaries who have an analytical accounting system, this means that they would be able to account and identify every penny that they spend. They need to use the usual accounting practice, which is analytical accounting, but they may as well decide to use the indirect cost of flat rate of 20% indirect costs. The simplified method is something which is, I would say, in between the full cost accounting and the flat rates. It's something in which we see a situation where the beneficiary is almost having a full cost accounting, but it appears at a level of the whole organization. It doesn't go down to define it into departments or directions or whatever there is in the institute. So the simplified method, it's a type of full cost accounting. You can identify your costs, but you can identify them only on the top level of your institute, and you cannot distill them into the different departments and account them for the single department and divisions of your organization. But it is a type of full cost accounting. The important thing to mention on the simplified method is that you have to be able to distinguish your costs for research from your other costs. So this is the first thing. If you cannot do this, you're not even fit to go for simplified method. The beneficiaries who are eligible to use the 60% flat rate, they can do that provided that they have no full analytical accounting. If you have a university which can perfectly identify their costs, we go there and we have the most sophisticated computer system for accounts. We look at it and the university is on 60% flat rate, be assured that we will make a recommendation in our reports. So if you have a full analytical accounting and you choose not to use it, it's not an option in FP7. You have to use it if you have it. What are the ways of determining indirect costs? The first thing is to say, well, I have a pool for indirect costs, and from that pool I have to exclude the ineligible items. Here are just some examples of items that we have seen throughout our audits: marketing, sales, financing costs, exchange rate losses. I think this is very relevant for Sweden. Costs declared or reimbursed by another EU project. We see it in this ineligible items. And costs with no relationships to the project. We have indirect costs, which are for some kind of a department that deals with sales, and then it appears in the pool of indirect costs, which are linked to our EC projects. This is not an acceptable way. The checks that need to be done for indirect costs, and this assuming that, well, more or less assuming that there is analytical accounting, you have a description of the methodology. The beneficiary needs to provide to the auditor the description of the methodology of calculating the indirect costs. They need to be reconcilable to the profit and loss account and general ledger. And they need to present us, the beneficiaries, with the calculation of the overheads rates. How do they calculate it? How do they come to an overhead rate? Because one thing is to have the whole pool, another thing is to split it by a cost driver and come to an overhead rate which you charge to our project. So this you have to demonstrate to the auditor. The auditor has to see whether the beneficiary uses a flat rate. If it uses a flat rate, needs to see why is it using it, because there is no analytical accounting, and then the checks following that are not really necessary. So if there is analytical accounting, then the costs that were charged need to be reconciled to the accounts. The auditor needs to check that there were no ineligible item in the calculation of the indirect costs, and that the costs that appear in the indirect cost calculation are those linked to the research activity, that there is a link there. And one very important thing, it's last, but I think it should be first, if not second, are the allocation keys. How do you apportion those indirect costs that you have defined as linked to your project. Do you apportion them by service? Do you apportion them by members of staff, numbers, by salaries? You have to show how you apportion all these eligible costs in your overheads. I think Jean-Marie can get on with the exchange rates, which I think will be interesting to hear.